economy is not allowing that type of restructure, so we're not, people aren't going to get jobs. Now, because I said that inflation, people think, yes, if we just can create enough inflation, people can afford these houses. We can't, because the wages aren't going to rise. And it's not just a question of when you create inflation, you make interest rates go up. So that makes housing even less affordable, because you have the high interest rates. And what a lot of people don't understand is, during the housing boom, we overbuilt. We built so many houses, and we're still building them. We don't need all these houses. We can't afford all these houses. And a lot of people bought houses that were a lot bigger than what they really needed, because they were investing. And then, people, if you think real estate's going to double, you might as well, double, get a 4,000 square foot house, because you make twice as much money on a 2,000 square foot house. So people bought houses that were bigger than the ones that they needed. People bought houses people bought second houses. People bought vacation homes an hour from their primary residence. And it was all because they wanted to gamble. I mean, kids were going to college, and they were buying condos when they only knew they were going to be there for 3 or 4 years. But they thought they would make money. They'd pay for their college. They'd pay off their college loans with the profits they made on their condos. And all this phony demand is evaporating. And so what's happening is young people who are graduating college who can't find jobs, they're moving back with their parents. And elderly parents who don't make any income on their bank accounts anymore because yields are zero, they can't afford to live by themselves, they're moving in with their grown children. People are taking on roommates. People are living together. It used to be, and it's going to happen again, it used to be that before people got married, a lot of times, people would never live by themselves. They always lived in an apartment. And it wasn't until you got married and you were to settle down and have kids that you would buy a house. So when a couple got married, they would be in the market for a house. Well, now, because of the housing boom, you have a lot of single women and single men in their 20s and 30s who already own houses. If they get married, they're going to be looking to unload at least one of them, maybe two. And I think as a lot of people are losing their jobs, I think you're going to start to see families sharing houses. I think you're going to start to see people renting out spare rooms. People who bought, these 4-bedroom homes when they're single, they have 1 or 2 spare rooms. They'll put ads in the paper. They'll be looking for boarders, especially when the cost of heating oil goes up, the cost of food goes up, and they can't make ends meet. All they have is a big house. They'll rent out rooms. So what does that do to the value of real estate? What does that do to rents? So it's going to take an incredible amount of inflation to get real estate prices to rise, right? So, but in real terms, they're going to be crumbling when that happens. They're going to have to create, imagine how much inflation they would have to create to get wages to go up. Right? Because wages still need to come down. So they have to, and that is not a solution. A much better solution to the problem is to let prices fall. Let real estate prices fall, let wages fall, let stocks fall. But the government doesn't want that, because then tax revenues fall. And then the government has to level with the American public that we can't make these payments. So the government doesn't want deflation, even though deflation is what the market wants, deflation is what the economy needs, but the government doesn't want any part of it. The government wants inflation. And unfortunately, it's going to get inflation, but it's going to devastate the economy. It's not going to be some kind of panacea. It's not a get-out-of-jail-free card. People say, oh, we'll just inflate our debts away. What does that mean? We're going to inflate our economy away. We're going to inflate our wealth away. We destroy the economy by doing that. But I understand that, and as an investor, people have to understand that. A lot of people in America don't understand that that is how the cost of government is going to be distributed among the people. It's going to be through inflation. When you have a lot of politicians, and they don't have the political courage to do the right thing. I mean, even if raising taxes were possible, they don't want to do it. Nobody wants to raise taxes on the average American voter. Everybody wants to raise taxes on the rich. I mean, that's easy. Sure, so do the rich, right? Because people will vote for taxes on other people. That's easy. But the problem is there's not that many rich people, and when you raise taxes on them, sometimes it backfires on you and you get less revenue. And I think that's where we are. I think if we raise taxes on the rich, we'll get less revenue from the rich. And not only that, but we might end up destroying the jobs of some of the not so rich. And so we'll get less revenue from them as well. So I don't even think tax tax hikes on the rich are going to be revenue positive. The only tax hikes that would work right now would be middle-class, broad-based middle-class tax hikes. Maybe the imposition of a national sales tax or value-added tax. That would probably net raise some revenue for the government. It would be a mistake to do that, but at least it would raise revenue. But no one is going to do that because nobody wants to vote for that. You know, the alternative is let's cut spending. That's what they should do. They should cut spending. But nobody wants to cut spending because that means somebody is going to get a smaller check from the government or no check at all, and that person's going to be mad. And that person's not going to vote to re-elect whoever cut their check. And that's what the politicians really care about. They don't want to piss off any of the people who are voting for them. So the only way that our leaders are willing to pay for government is by printing money, because nobody seems to appreciate that that actually costs anything. They think it's freebie, right? If we don't raise taxes, you know, we just print the money, well, we got all the government for nothing. Well, if that's the case, why have any taxes? Just print everything we need. But what happens is when they print money, that's a tax. It's a tax on savings, it's a tax on the cash value of your annuities, or your life insurance, or value of a tax on your muni bonds, on your CDs, on the money that you have stuck under your mattress. And so if you want to avoid that tax, you don't own the currency that's being taxed. The currency that's being debased, and that is, you know, the US dollar. It's not happening to as great an extent in Canada, but it might happen in the future. And I think as more people around the world figure this out, and people want to know, why is gold at $1,400 an ounce? Is the gold bull market over? Is the gold market a bubble? And I don't think so. I have those questions. I don't think the bull market is anywhere near complete. Because gold's price is not so much a reflection of what gold is worth, but what alternatives are worth, what the dollar is worth, what the euro is worth, what the yen is worth. All of these paper currencies are worth less, and that's what gold is telling you. Why are they worth less? Because there's a lot more of them. The governments keep creating them. And the more money they create, the less the money is worth, and gold tells you that. Gold is a measure of value for these fiat currencies. And for probably the last 20 years, from not the last 10, but the 20 years of the 1980s and 1990s, that was a bear market. That 20-year period, the price of gold fell. And that was probably the heyday of central banking. That's when central bankers were held in very high regard, and the world was convinced that the central banks could replace gold. That they were independent, that they were staunch guardians of the integrity of the currency, and they would keep the politicians honest. Well, now we know that was a problem. I mean, there is no independent central bank. They're all part of the government, and they're all acting to enable the government to spend. And now interest rates are at zero. Money is being created. And people understand that central bankers are politicians with printing presses. That's all they are. That's all they ever were. And people don't want that currency. People want gold. I mean, people are not buying gold because of uncertainty. I'm buying gold because of certainty. Okay? I'm certain that the dollar is going to lose value, so I don't want to own it. I'm certain that the politicians will keep taking the easy way out. It's interesting that there are a lot of people in the financial press that haven't bought any gold, that are trying to figure out why the other people are. And it's interesting when you hear their rationale, because they still haven't bought any. I'll go to an interview with some of these guys. For 5 or 6 years they've been seeing me on these shows, and I keep asking if you have any gold yet. And even though the price has tripled or quadrupled since the first time they saw me, they still don't own it. And every time it goes down, they're, oh, okay, see, we told you it's a bubble. So they go, so. But they don't understand that when you earn money, you have two choices. You can spend it now, or you can spend it later. And spending it later means you save it, you put it aside. And when you're saving your money so that you can spend it in the future, or so that your children can spend it in the future, or somebody's going to spend it, you want to make sure that that purchasing power is preserved over time, maintained. And if you don't believe you can do that, if you don't have confidence in what the dollar will buy in the future, well, then what will you do? Well, you'll own gold instead. And during the 80s and 90s, there was an opportunity cost there, because if you own gold, well, you missed out on a 7 or 8% CD that you could have bought. Well, now there is no opportunity, because there is no 7 or 8% CD. CDs are practically zero. And in fact, if you want to get into yield, you have to go out and buy 20 or 30-year paper, and then you take a tremendous amount of risk. Because if interest rates go up, the value of that paper plunges. So it's a lot safer just to own coal. And so more and more people are doing that, and that's just going to continue to drive the demand. And of course, the higher it goes, the more people want to buy it, and it shines a light on what's happening in Washington. And so basically, to sum up what I'm talking about, then I'll take the questions. We haven't solved the problem that led to the financial crisis in 2008. We've exacerbated the problem. You know, we've continued to travel in the same direction. We've taken on more and more debt. And for a while, we were able to postpone it because we nationalized the debt. We took $1.5 trillion of toxic debt off the banks and put it onto the Fed. And nobody really seems to worry about it when the Fed owns it, but the debt is still there. We've dramatically increased the balance sheet and therefore the supply of money in circulation. The result of that is that prices for everything have risen when they should have fallen. And we are going to have to confront the fact that rates are going to rise, just like they rose in Greece, or just like they rose in Iceland, or they're rising in Ireland, and now Spain and Portugal. Rates are going to rise here. You know, I remember when the subprime crisis first hit in 2007, everybody was convinced that it was okay because it was just subprime. No, don't worry about it. You know, it's contained. It's not going to spread. And at the time, I was saying and writing that that was not the case. That the problem was for the entire mortgage market, and it wasn't even a case of spreading. Right? The whole market was already infected. It's just that the symptoms showed up in subprime first because those were the more vulnerable mortgages. Most of those mortgages had 2-year teaser rates, whereas most of the prime mortgages had longer periods. And of course, these were loans to even the least creditworthy of the borrowers. So they were the most vulnerable. They were the tip of the iceberg. But there was a lot of ice beneath the surface. I just knew that it hadn't been exposed yet. And I was right. Well, it's the same thing, and the same players, and the same saying with sovereign debt. Oh, it's just Ireland and Portugal and Spain. It's just those pigs. And, oh, it's not America. Oh, no, we don't have to worry about it. It's not going to spread to America. No, it's not going to spread to America. It's already in America. You know, we already have the same disease. It's just that the symptoms haven't shown up yet because interest rates are still ridiculously low. But they're not going to stay there. They're not going to stay there for much longer. And when it happens, it's going to be just like it was before. Oh my God, this is a 100-year flood. Nobody could have seen this coming. I mean, how many times are we going to have 100-year floods? You know, before they realize that, hey, wait a minute, these aren't random events coming out of left field that nobody could have forecasted. This is a consequence of the monetary and fiscal policies that we're pursuing. And what I want to make sure for the people in this room is when it all hits the fan in a year or two, that you are prepared for it, that you're prepared for it financially, that you see it coming, that you have the right mix of assets in your portfolios, so you're not blindsided. And that's, I think it's been pretty easy over the last 10 years to make money in the markets because so many people are so wrong on what they believe. It's like, we're playing a game and people don't know the rules. And so they're going to keep screwing up and they're going to keep being surprised by what happens. People that were buying the financials and they're still buying those financials. They still haven't figured out what the game is. They still don't know how it's going to end up. But we have a better understanding of economics, and therefore we understand. It's hard to pick out exactly the timing. There's no way to know a short run what's going to happen day to day, week to week. But we know in the big picture what is going to happen and how it's going to look in the final analysis. And so we just need to make sure that we have our assets positioned to benefit from the final outcome. We know that ultimately the world is going to change, that the leaders are not going to be in Western Europe and the United States. What's going to dominate the global economy is the Far East, Southeast Asia, China, India, parts of the Middle East. That's going to be the center of global economic activity. That's where all the wealth is going to be created. And that's where we need to invest. And the standard of living of billions of people that have been suppressed for generations is going to rise. The emerging markets are going to emerge and that many of the developed markets are going to submerge because the emerging markets have been subsidizing us, they've been subsidizing America. We've been living beyond our means, and a lot of people can see that we've been living beyond our means, but it's only because the people in China have been living beneath their means. But they're not going to live beneath their means forever. You know, I keep hearing these questions, you know, people ask me all the time, well, you know, Chinese need us. Who's going to buy their goods? They'll buy their goods. They need their goods a lot more than they need our paper. See, no one ever asks me the question, what's going to happen to America without the Chinese stuff? I mean, we're going to have a lot of paper, but what good is that? You know, maybe you can line a bird cage with it, or you can use it to, you know, heat your house, but it's going to burn quickly. You know? But the Chinese are going to have a different problem. They're going to have all this stuff. Of course, when they don't sell the stuff to us, what happens? The price drops and the Chinese buy it. They get the stuff at lower prices, which is what they need. I mean, when plasma television sets first came out, I remember them there, you know, probably how many people, they were about $10,000 a piece. Remember, how many people paid $10,000 and bought a plasma TV when it first came out? Anybody? How many people own the plasma LCD TVs now? See, a lot of people own them. And why did you buy them? The price came down. That's why you bought them. That's what's going to happen in China. If we stop buying their stuff, the price will come down in their money because their currency will rise, and they'll all buy the stuff. You know, it's, you know, people think that the Chinese don't want things. Of course they want things. They're just priced out of the market right now. But you have people, you have Chinese workers that are working in factories making washing machines and dryers, and then they go home and they wash their clothes in a bucket and they hang them up on clothespins in their backyard. Like they don't want those washer and dryer machines. Of course they do. Of course they want them. And you know what? They can afford them because they're making them. It's the Americans who can't afford them because we're not making them. You know, people think that it's supply that creates demand. That's where it comes from. Without supply, demand is nothing but desire. But if you want to actually be able to buy something, it has to be made. And once it's made, it's going to be bought. The question is, who's going to get it? And right now, it's Americans that get it, but we're getting it with China's money. But when China stops, and their economy will grow much more rapidly when their own citizens get the fruits of their labor. I mean, we've got the Chinese convinced. See, this is the deal we made with China. They get the jobs, and we get the stuff. But the only reason that you want a job is to have the stuff. See, if we can get the stuff without working, why work? You know, and all China's got is the work. See, that was slavery. You know, but the slaves, you know, they got emancipated. You know, they're waiting for that in China where they can be emancipated out of this situation where they're working and we benefit. So that's going to change, and so you have to understand that, and then you have to reposition your assets and your investments and take advantage of the fact that those currencies are going to rise and the relative wealth and affluence of that part of the world is going to increase. And as China's wages increase because their money is more valuable, their assets are more valuable, you want to own those assets and be positioned. And unfortunately, we're going to see a very big drop in the living standards of the West, particularly the United States. The United States became a wealthy country because we produced everything. And we produced everything because we were free. We had very low taxes and very few regulations, and so we were productive, and because we produced a lot, we were able to consume a lot. Now we are able to consume a lot despite the fact that we're no longer productive. We have big government, high taxes, numerous regulations, central government plan, a welfare state, but we still consume because the rest of the world is letting us consume what they produce because they have it. But that's all going to change. And the key that I don't really know the answer to yet is how is America going to react when this happens? Are we going to realize the source of our problems is government and try to turn back the clock and try to re-embrace the foundation that our founders gave us in the Constitution and go back to limited government so that we can rebuild a vibrant economy, maybe one day, you know, take the torch back from the Chinese closer to the end of the century? Or are we going to go further towards the left, and are we going to, it's all the fault of capitalism, we need more government planning, we need more regulations, and then we're just an economic wasteland. And then who knows, I mean, we might have to have a violent revolution sometime in the future. But I don't know which way that's hoping that we take the former path, and hopefully, my voice and other voices in the United States will get a little more respect as more of these forecasts come true and people realize it. But anyway, let me open this up and take questions. Do you have them all written down on these?
Hi, Peter. Yeah, I think everyone in the audience has asked a question. So we're busy sorting here. I can tell you that there's a lot of questions on the housing market. So I think Russell and David selected some of the best ones there, and we'll continue to sort here.
I think this is a good broad-based question. I appreciate it. So, in your opinion, Peter, why is Canada more internationally as a safe haven?
Well, I don't think it's ignored. I mean, I talk about it, and I do believe that the Canadian dollar, I think even as a reserve currency, I think some central banks mentioned that they were increasing their allocation to Canadian dollars. But, I mean, Canada is, in the scheme of things, it's relatively small. And so that's probably it. Maybe some people look at Canada as, very close to the U.S., so they don't think it's as much of a diversification. But I mean, I think for anybody who wants U.S. dollars, I mean, it's stupid. Why buy U.S. dollars when you can buy Canadian dollars? I mean, if that's your choice. If I can only hold one currency, Canada or U.S., it's a no-brainer. So I would take Canada. And when I was a kid, we used to try to, if we had Canadian money, we used to try to put them in, get them in vending machines and use them because Canadian money, the Canadian quarter was, Canadian money was 60 cents to 70 cents. You guys are going to see that pretty soon in a couple of years. American quarters are going to start shooting, try to pass them off. And yeah, I mean, it's going to take $2 U.S. dollars to buy one Canadian dollar, maybe three, maybe more. I mean, you can look at when the U.S. went off the gold standard in 1971, it only cost 23 cents to buy a Swiss franc. Now, for the U.S., America has to spend $1.06, $1.07 to buy one Swiss franc. And the Swiss franc has lost value over that time too. It's just that the dollar has lost even more. But I think the next, 20 or 30 years, if we have that long, it's going to be a lot worse. In fact, the dollar could lose as much value in the next 5 years as it has in the previous 30. So, I don't know. I mean, I think more people are talking about Canada. There certainly is. Canada is the resource theme. There were a lot of people that want exposure to resources. And obviously, Canada has the resources. And, as energy and minerals become more valuable, that improves the Canadian economy because it improves their balance of payments. Everybody benefits, even if you're a business that has nothing to do with resources, you will benefit by the positive economic climate, by a growing trade surplus, which will enable more imports of other goods that you don't produce. So, I think it is. I don't think it's being ignored at all. And I think as more money flows out of the dollar, a share of it will go to Canada.
Okay. Well, on that note, if the U.S. dollar crashes, what would you foresee the immediate eventual outcome for Canada broadly and commodities?
Well, a lot of that depends on what Canada does in reaction to the crash of the dollar. And the circumstances surrounding that crash. But ultimately, I think that there will be certain companies or businesses in China that will suffer, and there will be others that will thrive. It's going to depend on how they're exposed to the U.S. But as the dollar is crashing, it's crashing against something. Right? So if it's crashing against other currencies, then those countries are going to have the buying power that America lost. So when Canada's thinking about, gee, I lost this American customer, okay, well, you gained another customer. If it's simply crashing against the Canadian dollar, well, then Canadians have more purchasing power. And so there's just more domestic demand that's being created to replace the demand from the U.S. The fear is the reaction. Does Canada panic? Do they start printing more money because they think that, oh, the Canadian dollar is rising, this is a terrible thing. It's not a terrible thing. But so it will depend. I think that there'll be a lot of potential immigrants immigrants from America coming to Canada, which will be a positive for Canada because more people coming to your country is a good thing, especially if they're coming to work. And generally, I find that the people that leave the country are a lot more ambitious than the ones that stay. So you get the brighter, the harder working, you get the best of the Americans, right? And the worst they stay behind. So, and also, you know, I'm up here in Canada, it's pretty cold up here. It's warm down in Florida. And so when the US dollar crashes, there will be a lot of Florida real estate that you guys can buy real cheap. Maybe even, you know, high school kids will be able to use their allowance to buy real estate. So you can turn Florida into, you know, a retirement home for Canadians. So, you know, that would be a benefit as we start selling off. And Americans will have to move inland because the coast will be occupied by foreigners, which is what you see if you go to any kind of Caribbean island. You know, the native population doesn't live on the beach, it's all the foreigners. That's how America's going to live. I mean, there's a few Americans that will still have money because there are Americans that own the right things, but a lot of Americans are going to get wiped out because they own community bonds, and treasuries, and they're dependent on pensions that are just not going to be.
So the next question is a clarification question. Can you explain why borrowers are rewarded in an inflationary environment and correspondingly recommended that you should leverage because of this?
Well, I mean, it's a two-way story, and a lot of it depends on what you're doing with that borrowed money. But the way borrowers benefit from inflation is it diminishes the value of what they have to repay. You know, if I borrow $1 million, and when I borrow it, $1 million is the price of a nice house, and when I pay it back, $1 million is the price of a pack of chewing gum. You know, what did I give the lender? He gave me the equivalent of a house, and I gave him back a pack of gum. And what's the difference? The difference is my gain, because you know, I own this house now, or maybe I bought a house with money, and the guy that loaned me the money, all he can buy is chewing gum. And the key to the inflation game as a debtor is to make sure your debt is fixed. Because if your debt is floating, then in higher inflation, your interest rates will spiral, and you might not be able to make the payments. And so the key is if you're going to take on debt as an inflation, make sure it's fixed for a long period of time, so that you never have to worry about the lender requiring you to make higher payments based on all the new inflation that they didn't anticipate when they made the loan. But inflation is a transfer. It transfers wealth from debtors to creditors, and from creditors to debtors. And if you think about it in that terms, you know that's why governments favor it when governments are the debtors. The U.S. government is the biggest debtor in the world, and therefore is the biggest beneficiary of inflation. You know, if we have $14 trillion debt, if we create 10% inflation, we wipe out $1.4 trillion of debt in terms of real purchasing power. And that is what the government is doing. I mean, the government, there's only two ways the government can handle debt. One is to default, and the other is to inflate. And really, that's one way, because inflation is simply a form of default. But there's one thing I know for sure: we can't pay the money back. That ain't happening. So the question is, how are we going to default? But when the government defaults on its own debts through inflation, it helps everybody else default on their debts. But what that means is, you don't want to be the lender. You don't want to be the, because you're losing your wealth. And as more and more people figure this out, they won't want to loan money. They don't want to save money, which is a problem, because the key to economic growth is savings. So if you create a society where nobody is going to save, the society is doomed to collapse, because savings are what we need. But anyway, so should you go out and literally borrow a bunch of money because you want to get out of inflation? I don't know, it depends on what you're doing.